Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings. Today we're diving into Occidental Petroleum's latest proxy statement, and let me tell you, it's juicy. Are they building a direct air capture facility or a shareholder value destruction machine? We'll see. This document is essentially Occidental's pitch to its shareholders, asking them to vote on key issues like electing directors, approving executive pay, and more. Think of it as a corporate report card, and we're here to grade it. Let's kick things off with a message from the board. They're boasting about 2024, calling it an exciting year. The Crown Brook acquisition, progress on their first commercial scale direct air capture DAC facility called Stratos, and strong financial performance are supposedly the highlights. They even took a field trip to Carbon Engineering's Innovation Centre. Sounds like fun, but let's see what the numbers say. The board is happy about their ability to repay $4.5 billion of debt and increase their dividend. Let's remember to verify if their cash flow is really as great as they claim. They are also happy about the 22% dividend increase in early 2024 and a 9% increase in early 2025. These increases should be a good sign that they are doing better. Before we get too deep in the analysis, let's take a quick look at the annual meeting. It's scheduled for May C2 2025, and shareholders will be voting on electing directors, approving executive compensation, ratifying the selection of KPMG as their auditor, and approving an amendment to their long-term incentive plan. Standard stuff. They are encouraging us to review Occidental's annual report on Form 10K, but we don't need to do that right now. The board is recommending that shareholders vote for each of the director nominees. A lot of these reports is just recommending that we approve their decision. The board is recommending that shareholders approve their named executive officer compensation. It would be strange if they recommended otherwise. Of course, they want us to for ratifying the independent auditor selection of KPMG. Is it really independent when the company recommends it so strongly? This time they are asking for the approval of Occidental's amended and restated 2015 long-term incentive plan. All of this sounds great, but now we need to look at the people running the company to understand how this is going. Jack B. Moore, the chairman, former president and CEO of Cameron International. We have Vicky A. Bailey, former assistant secretary at the US Department of Energy. There's Andrew Gould, former chairman and CEO of Schlumberger. Lots of industry experience here. Carlos M. Gutierrez, former US Secretary of Commerce. And of course, Vicky Holub, the president and CEO of Occidental herself. It's a pretty standard board, a mix of industry veterans and some government experience. Looking at the composition highlights, 9 of the 10 nominees are considered independent, which is good to see. The average tenure is around 7.9 years. Let's check the corporate governance highlights. We have an independent chairman, annual election of the entire board, and a board evaluation process. They say they listen to shareholder feedback, which is always a plus. The board committees are all independent directors. The ability of shareholders to call a special meeting at a 15% threshold is interesting, giving shareholders a bit more power. The shareholder engagement section says they engage with shareholders representing over 50% of their outstanding shares in 2024. That's a significant outreach. Discussions covered everything from cash flow priorities to the progress of their Stratos project, a direct air capture initiative. Here's where things get interesting: executive compensation. A whopping 90% of the CEO's target direct compensation is at risk, meaning it depends on performance. For other executives, it's an average of 84%. This at-risk compensation is split between annual cash incentives and long-term incentive awards. Base salary only makes up 10% of the CEO's target direct compensation. A significant portion of the annual cash incentive, 30%, is tied to sustainability metrics. We're talking emissions reduction projects and low carbon ventures. That's a sizable chunk linked to environmental goals. Some governance policies include pay for performance and listen to shareholder feedback. A clawback policy is also present, giving them the right to recover bonuses if misconduct occurs. They don't allow hedging or derivative transactions, which is a good sign. All normal policies. Alright, let's look at the agenda for the meeting. The first proposal is to elect 10 directors. Biographies of each nominee are included, highlighting their qualifications and core competencies. The board recommends voting for each nominee. The director qualifications for the nominees seem appropriate, especially Andrew Gould's. Mr. Gould has an undergraduate degree in economic history from Cardiff University and qualified as a chartered accountant with the Institute of Chartered Accountant in England and Wales. We see on page 12 there is something to the compensation program. Things like pay for performance and shareholder feedback are items they do, while stuff like no hedge or derivatives are things they don't do. Let's check out the environmental, health, safety and sustainability credentials of Jack B. Moore. And it seems he was the chairman since 2022. It is an independent position, which is good to hear. 9 out of 10 nominees are independent. The average tenure is 7.9 years and the board is 50% diverse. All great points for them, but can they prove it? The questions and answers are pretty standard. It's just some filler that explains how to vote and who is entitled to vote in the meeting. I wish these reports wouldn't include so much fluff. The Audit Committee ratified the selection of KPMG as Occidental's independent auditor and will be responsible for the financial statements of Occidental. In 2024, the audit fees billed by KPMG were $16.6 million, and 2023 had $16.3 million each. Same with all other fees. Finally, we need to decide on approving Occidental's amended and restated 2015 long-term incentive plan. The Executive Compensation Committee wants more shares of common stock that may be issued under the LTIP by an increase of 55 million shares, which would be for compensation programs. There is an additional 10-year extension from February of 2025. The committee has stated that they don't take feedback from shareholders for this. We need to see who the major shareholders are, with the biggest one being Warren Buffett and all affiliated entities. It is 34.07%, with Dodge and Cox coming in next at 8.83%. We have the Vanguard Group clocking in at 6.5%. I had to scroll all the way down to security ownership to finally find something on our CEO, Ms. Holub, which we discussed earlier. I would have preferred this information to be up front so that we knew the alignment of executive pay with performance and company goals. I'm looking at security ownership by executives, but there's not much to tell. It looks like a standard security ownership report, as is with most annual reports. I'll jump to the reconciliation since we didn't get to see this anywhere else. C is really just defined as cash flows from operating activities before changes in working capital. It seems pretty typical in its function. Looking at free cash flow, the numbers are decent. Nothing too crazy to note. We saw 11.7 billion in operating cash flow, which leads to a respectable 49 billion of free cash flow. Havdi made a billion of free cash flow, so what's the verdict on Occidental? They did well in a volatile commodity market, leveraging high oil prices to pay down debt and reward shareholders. While strategic acquisitions like Crown Rock have the potential to bolster long-term growth, the reliance on debt financing continues to be a risk. The big thing is that their future lies in transitioning to a low-carbon business, and the economics of carbon capture are still very uncertain. And I'm not sure about the long-term sustainability on this one. That's all for today, folks. Let me know what you think, and remember to like, comment, and subscribe for more deep dives into the world of corporate finance.